everybody was constructive on banks earnings, and earnings growth might still look okay, but if how but there has been pressure there, maybe because the sector is over owned as well, and maybe 2022 also saw PSU banks do so well that they are seeing the wrong end of the stick currently. What is your view on financials currently, banks, private and PSUs, as well as NBFCs? How do you see that?
Yes, the banks, I think, currently are still looking. If you look at in terms of earnings growth, we are not seeing any major kind of negative impact. Obviously, the question remains on growth. Credit growth has been fairly good. Next year, as we get into it, whether that remains in the double digits is to be seen. We still believe that it will still be in the low teens kind of a growth, which is not bad. Interest rates remaining slightly higher for longer is not necessarily bad for banks. You've seen the
Yeah.
banks benefit because of the increase in the net interest margins, because the late rates are now linked to the MCLR rate, so that transmission is much faster. And if there is another 25 basis point, you will see that net margins, okay, which have kind of looking to have peaked out by the fourth quarter, could remain higher for a longer period of time. And overall on the credit cost side, we're not seeing any major challenges. I mean this time around, I think we've seen that the overall the corporate balance sheets are in pretty good shape. Except for the Adani issue which has come up, but overall, if you look at across large corporates, there's been a significant deleveraging which has happened in the last 2-3 years, especially after COVID, and we're not seeing any major stress across any large sector or large corporate. So given that, I think your credit costs will remain fairly benign, and that's the reason why we don't see any negative connotation for the banks, even if interest rates go up a bit. Sentimentally, banks have got impacted recently, as I've said, because of slightly over ownership, which has been there, and normally when there is a sell-off, right, from FIs, we see this sector getting impacted. So I think bank still looks good, but again, within that, PSU banks had seen a good rally recently because of re-rating in multiples, and also obviously good set of numbers coming in from the PSU banks, which also would probably continue for this fiscal year. But I think we'll still prefer the private banks. I think PSU banks, we think, will still remain a trade, because beyond a point, I think the growth dynamics for PSU banks will be a bit of a struggle. They need to raise capital because need to grow. Private banks, I think, will continue to, I think, be a good bet from a long-term perspective. So I think post recent correction, the bank stocks now look fairly attractive, both on compared to the historical multiples, and also in terms of the current ROEs and price to book value. Okay, if you look at where they would be, look fairly attractive for us to be constructive on the banking space.